It's hard to sort of point to what a rebound would look like. There's no doubt you could probably see 1 or 2 days of a bounce. You saw that slightly last night in the US, and the fact they sort of moderated out. It's more, at the moment, you've just got that unfortunate part of what markets do when they get through a period like this, is that you're seeing a really big, what we call shakeout. It's all based on, as it should be, the economics. The economics suggest that a recession is almost inevitable in terms of how things are moving. If you look at confidence in the US and here in Australia, if you look at what spending habits are starting to do, they're all moving in one direction, and that's quite negative. And we're just getting that massive rebalance. Is it over, to your question? You can't ever forecast that. And normally when we are in what we call a bear market, which is a decline of 20% or more, which is what I would argue we're in, you get all sorts of random movements. The one advantage we sort of have on Monday, if you want to call it an advantage, the US is on a public holiday. So all of this week's sort of news can have another sort of day to maybe settle into it to understand what happens next week. But this isn't over, unfortunately, and I don't think it will be until we get a full, clear understanding about how much harder central banks will go, because they are going to go hard. It's just a question of by how much more.
Well, let's talk about the US Federal Reserve. And of course, after that hike, we did see that bloodbath right across Wall Street and right around the world as well. All the share markets really felt it. Now, the US Fed Chief Jerome Powell is insisting that US will not go into recession. But then again, I'm reading that there are analysts who say that there is a need for that recession in order to correct the rising inflation. Is that a sentiment that you share as well?
Yeah, so two parts to that. The last part of your question, it is a well-known fact that how do you kill inflation? Just cause a recession. That is a known market term. It is a known economics term, because it's true. As soon as you have a recession, it clearly changes the economics. It slows down people's spending. It slows down people's confidence. It changes the way investment is done. All of that together means that if you've got less spending, less movement in investment, the price will go backwards because demand has fallen. So that's how you tame inflation, unfortunately. And it's not a good way of doing it. Let's also point that out there. What the other part of your question, and what I think the best way to explain it at the moment, is that central banks are trying to tell us that they can have their cake and eat it too. They're saying to us that we can catch inflation. We can get this. We will get it back under control. It is the most important thing for us to be doing. But don't worry, it will only crimp growth, but it will not therefore lead to such a crimping that it causes a slowdown/crash that therefore leads to a recession. Because it is simple year 10 economics. Don't forget, gross domestic product, GDP, is consumption plus government spending plus business spending plus net exports. In the developed world, about 65% of most developed countries, the GDP is concerned by consumption. 65% of consumption is what makes up GDP. Here in Australia, the US, most of Europe, most of the UK, all of that stuff. So when you've got one policy lever to try and slow down inflation by slowing consumption, that's what the market is saying to you, is that they don't believe that they can have their cake and eat it too, because if you're going to slow consumption down by that much, that is going to be a big, big drag. Almost 2/3 of your GDP growth will therefore contract, and therefore it won't be offset by anything else inside that equation, and that's where the recession risk comes about.
Just going back to the stock markets, and I want to talk particularly about cryptocurrency, where does all this then leave the cryptocurrency market? You know, we're seeing this decline in Bitcoin and many of the other cryptocurrencies as well. Would crypto investors be best to just hold on and ride this wave?
So crypto is an interesting sort of concept on that perspective, because realistically what you're doing is that you're buying for the hope that somebody else will pay you more for something. Because again, this can be the theological debate about it, is what is exactly cryptocurrency, because it doesn't have anything behind it. What I would say in terms of the description around where crypto has been over the last couple of years is that when you have incredibly, incredibly low rates from central banks around the world, which is what we've had, effectively free money, you can use it in whatever way you want. And therefore, if you look, very heavily correlated that as rates have fallen from basically 2011 to the bottom we got in 2019, and then there was a bit of a rise, and then obviously the collapse that we saw in rates because of the COVID-19 pandemic has driven money of this kind of style into things like crypto assets, because they are an expansionary, highly growth, highly movable opportunity. And I think that's the word. The word is opportunity, because again, there is an argument to be made, what exactly is crypto? And I will let other people explain that very, very well if they want to. But it is literally something that doesn't have any sort of underlying growth in it because it is basically a transactional tool and people are trading that rather than actually using it for anything else. So crypto is an unknown entity about where it goes from here because, again, if money gets tighter and tighter and more expensive, you are going to see those people that put their money into it having to pay higher interests and therefore having to start subsidizing that with some form of repayment. And that means you might actually sell your cryptocurrency to repay that repayment.
Yeah, more pain for them then. Evan, it is always good having you on Weekend Breakfast. Thank you so much for sharing your insights with us. Evan Lucas there.
Thank you, Fazia.